We're back. Thanks for staying with us. Joined now by Brian Altounian. He's the founder of Atlas Voyager Wealth Maximization Strategies. Brian, always a pleasure having you on the program.
Thank you, Don. Always great to be here with you.
And one of the things that you do is you help companies raise money in a variety of ways. One of them, of course, is ERC. You want to reiterate that for us, Ken?
Sure. Yeah. A lot of people have been hearing these advertisements on the radio. If they hear the figure $26,000 per employee, that's what's triggering a lot of folks. But like what happens a lot of times when we hear commercials on the radio, it sort of goes in one ear and out the other. The ERC program was put in place during the pandemic when the government mandated that companies take certain actions to change their operations, either shut down, stagger the work hours, whatever it was. And the ERC program was done at the same time as the PPP, the Paycheck Protection Program, and the EIDL, the emergency loans that came through the SBA. But most companies took advantage of the PPP and EIDL because they turned them around really quickly. The ERC program is called an employee retention credit. Sometimes it's called an employee retention tax credit. So if companies kept their employees on board during the pandemic in 2020 and for 3 quarters of 2021, they're entitled to resubmit their 941, their quarterly tax reports, and get a rebate of the payroll tax payments that they made during that period of time. It's worth about $5,000 per employee for the year 2020, and $7,000 per employee per quarter for the first 3 quarters of 2021. So this is actually a tax rebate. It's not a loan. It doesn't have to be repaid. 941 quarterly reports get amended. And again, the difference between this and PPP is a reason why most people didn't apply for the ERC is that it takes a little bit longer to get the money because we're dealing with the IRS, and the IRS, we know what the IRS is all about. But I will tell you this: I just got notification. One of my clients just got back $154,000. I've got another client that was a roofing client, a small client, 7 employees. They're getting back just under $70,000. I've got a larger client, it's got 50 employees. They're getting back $944,000. I'm literally looking at the chart, $944,000 in a tax rebate that comes right back to the company to do whatever they want with. So it's an amazing program. Some people also feel that they didn't qualify because their business maybe didn't go down. In the initial days of the ERC program, Don, you had to show that you took a 20% loss in business. That is no longer the case. Now, if you change your operations in any way, you staggered hours, you couldn't go to a trade show, which is where you normally see your clients and your competitors, if you will. You couldn't get to a client's location easily. Supply chain issues that may have stopped deliveries of inventory. Anything that impacted your operations during those 2 years allows you to qualify for this ERC program. And I'm telling you, the company that I work with has recovered billions of dollars in payroll tax rebates through the ERC program. So it's a phenomenal program. People should take advantage of this.
Well, the old line about found money, of course, if it was laying in the street, you'd bend over to pick it up. And this is really literally found money.
It is literally found. You're 100% right. It's literally found money. I had people go, I didn't even know I qualified for that. By the way, I will tell you this too. So this is good information. Nonprofits qualify for this as well. So I have a friend who runs a church in Missouri and a gal who runs a nonprofit in Santa Monica, California for children with disabilities. She has 50 employees. When I first told her about the program, she said to me, boy, if I could get $50,000 back, that would be, big deal for our nonprofit. And I said, listen, at 50 employees, you'll qualify for somewhere between $500,000 and $1 million. And she almost fell out of her chair. So people don't realize. And the difference, by the way, is if you took PPP money, they don't want you to double dip. So the government's not, despite what a lot of us feel, they're stupid, but they're not that stupid. Like, they don't want you to double dip. If you got PPP money, they don't want you to double dip. You can still qualify for ERC. You just won't get the full $26,000 per employee. You'll get closer to $11,000 to $15,000 per employee. You'll still get some, but not all of it if you took PPP. So if you didn't take it, you took one payment or you took both payments, you'll still qualify if you made changes in operations for your company.
Now, Brian, I know you work with other programs and opportunities for companies to raise funds to fuel their operations. What other ways can you help companies raise money, and what kind of deals are you looking at right now?
Well, it's interesting because I look at, first of all, you're right. There's a whole bunch of different ways. People are doing, reggae. They're doing a lot of, there's a lot of ways that they're raising money. Crowdfunding has been a very big deal, although I still think could be somewhat problematic. The Reg D, the traditional public market kinds of filings, securities filings. I find that once I understand what a company, what their market is, what proprietary technology they have, I try to find investment groups that will that are looking in that particular segment. So, for example, I'll share this with you. I have a company that does amazing clean. They do an air cleaning. They have an air cleaning technology that's kind of revolutionary. All these toxins are airborne and pathogens are airborne. This actually sucks the air in, cleans it, spits it back out. And, originally their target market, they thought they would go after schools because that makes a lot of sense. We want our kids to be safe and have clean air. The problem is, if you ever thought about getting a contract with a school district, it's a nightmare. It's like working with the government because, in essence, that's what you are. So I look for companies that I actually suggested to them that they look at the elder care area, and that companies that have a lot of investment in elder care facilities. So there are private equity firms, and I'm not a huge fan of venture capital companies because they're like, I don't suggest any early stage or young company go after a VC, because VCs there's no venture in venture capital. Family offices, private equity, again, going in, making sure they're doing cost recovery programs, the ERC putting money in their pocket to get capital. Convertible notes are still a big thing. There are a lot, depending on how the founders are positioned themselves financially. There's a lot of things that can be done, because, well, just let me finish the thoughts, and I'll say there's a lot of things that can be done to leverage OPM, other people's money, to execute on our plans. And so there are programs that are available. And I would say this is not just for companies, but for individuals as well. There are programs available that allow you to take the assets that you have and leverage those assets to get access to capital. There are so many programs available that people don't think about, or they may have heard something about it, kind of like the ERC, and they don't think that they qualify. They don't think it applies to them. There's a whole bunch of things. Listen, for folks over the age of 62, a home equity conversion mortgage can make a lot of sense. Some people are like, well, that's a reverse mortgage. I heard terrible things about that. Yeah, you hear that from the banks that don't want you to take a reverse mortgage. But the reality is, if you're over the age of 62, you can take equity out of your home and never have a mortgage payment ever again. Take that equity, put it into a business. It's going to turn around, it's going to build asset value, but also build cash flow. In some cases, help you get to the public market or to your exit strategy. And that's just one example. There are so many of these kinds of examples: securities-backed lines of credit, business lines of credit that companies can qualify for. That whatever it takes for a founder of a small or early stage pre-revenue company, whatever it takes to raise money, they need to explore all of those. And those are the kinds of things that I work with, at Atlas Voyager and with my team. And we've got a lot of solutions for families and for businesses. And I'm going to tell you right now, the big one, this ERC thing, we're starting to see some saturation in the market in some of the larger states, but there are so many people who have not taken advantage of it, who haven't heard of it, who don't know what it means, who think they don't qualify, that everybody should be exploring every avenue to raise capital for their venture and get to that next stage, moving out of development into execution stage for their companies. If that makes sense.
For those watching who say this guy is speaking my language, how can they get in touch with you?
Well, you can reach me at a couple things. I'm Brian at avwms.com. That's Atlas Voyager Wealth Management Strategies. So Brian at avwms.com. I have a Gmail address as well, brian.altounian@gmail. And Don, I'm on every social media outlet. I use my name because I don't believe in hiding behind an anonymity. So people can reach out to me. They can see some of the stuff that I do. Today, I'm going to be doing a podcast for families with special needs family members. I've been doing that for about 2.5 years because I want to make sure that everybody takes advantage of every financial product available in this country. There are so many, and we need to be able to access that. Our company helps people do that.
Atlas Voyager Wealth Maximization Strategies, Brian Altounian, old friend of the program. Thanks so much for joining us. Great advice.
Don, I'm a huge fan and have been forever, and I love the work that you do. And people should be listening, and this should be all over the place. And I'm just telling you, I love the work that you do here at Money TV. So thank you for having me on.